Let's put the spotlight on OneSource Solutions, one of the pharma majors. Let's deep dive more into the numbers as well as what's the outlook going ahead. And let me welcome Mr. Neeraj Sharma, CEO and MD of OneSource Specialty Pharma, joining us on the show. Hi, very good morning, and thank you so much for your time. And firstly, if you could elaborate on the 9 new MSAs that were signed during the quarter. How many are there with the new clients versus the existing ones? And when do you expect a meaningful ramp up in the execution?
Yeah, thank you. Thank you for having me here. See, MSAs, we have been saying, right, that there's a very positive momentum across all our service offerings, and that is reflected in the MSA wins we have had in the last quarter. Where it's across our biologics, drug substance, drug device combination, sterile injectables, as well as the soft gelatin capsules. So we have had positive MSA trend in all. In fact, not just the new MSAs we have signed, we are also sitting on a very strong RFP funnel, more than 50 RFPs as of end of last quarter. So it sees, as I said, across all modalities, all because of our own increase in capacities, but also because of the very strong tailwinds which we see both in our key drug device combination business as well as in the biologic space.
Understood. So that's as far as some expansion plans and execution ramp up is concerned. But if you look at the numbers, they also look very strong. So revenue has inched higher by about 12% on a year-on-year basis. You've also gone ahead and raised your guidance for the full year. If you can take us through what led to this strong set of numbers that you reported in the second quarter, and what factors made you believe that you will be able to achieve higher revenue for the year?
Yeah, so just to help you understand, our second quarter was basically around execution of the various MSAs, whether in drug device combination or our other modalities which we have been working on. And that has been also our first quarter. We had mentioned the same, whether it is revenue growth, whether it is EBITDA growth, which we had a significant 37% EBITDA growth, our 500 basis points margin expansion. So all that, what we did, the increase, the outlook which we have reiterated and in fact raised is actually our midterm outlook. That's what we have done actually, which we have raised to, in fact, now being a $500 million revenue company by FY28, including the recently announced acquisition, which we did. So for the second half, of this year, what we have not given really any guidance, primarily because we had said that this is going to be an year of flux for us, because while we are all set and ready, whether in terms of our capacities or in terms of the compliance status or the regulatory approvals of our site from all major regulatory agencies, where the DDC, especially semaglutide, is going to go off patent in March, April next year. However, while we have done whatever is in our control, what we don't have under our control is the regulatory approval for which our customers need to get. And because there is a fair bit of ambiguity around that approval over the next 2 quarters, we have not really mentioned that. What we are saying is that because we have got a very strong uptake in the forecast from our customers in our DDC, and basis that we have actually accelerated our capex program, and which gives us a very strong confidence, along with our customers' confidence, to have a strong FY27, and basis which we have reiterated and in fact raised our FY28 outlook, even if the next 2 quarters will be kind of fair bit of ambiguity around them.
All right, Mr. Sharma, thank you so much for taking your time out and joining us here on ET Now. So the outlook continues to remain very positive. You've raised your guidance. Next few quarters are expected to remain challenging, but the outlook going forward continues to remain very positive. Thanks so much.